Welcome to the Real News Network. I'm Mark Steiner. Great to have you with us once again. Remember, a few weeks ago, we spoke with the economist Bill Black about a report that was released. It was called The Social Structure of Mortgage Discrimination. And one of the key representations in this study about discrimination was the story of Baltimore. Of course, that's the city from which we broadcast from, and it's also the city that I hail from. Now, the research done by Jacob Rue, Len Albright, and Doug Massey looked at over 3,000 loans over an 8-year period from 2000 to 2008 by Wells Fargo. These loans to black borrowers were charged higher rates than and given stipulations not applied to white borrowers. And this had nothing to do with the income of the borrowers or their credit rating and history. It led to massive home foreclosures in the black community. This discrimination cost a typical black homeowner $14,900. And if that person lived in a predominantly black community, well, that cost was closer to $16,000. And as impossible as it sounds, the penalty was highest for black homeowners making more than $50,000 a year. So Wells Fargo paid $175 million to settle these lawsuits brought by allegations of predatory lending in Baltimore and other parts of the country. Okay, Wells Fargo settled for millions, but black wealth is being devastated in this country and has not grown. Have things changed? Why have things changed? And how have they changed? What is the root of all this? And what moves have been made or have to be made to stop these blatantly racist policies in the 21st century? We are joined today in the studio by Asante-Muhammad, who is Chief of Equity and Inclusion at the National Community Reinvestment Coalition. And Dietrich, good to have you here at the Real News.
Thank you. Good to be here. Yes, sir. Good to be here.
So where do we begin this? I mean, I think many people looking at this will ask a question of, I mean, we're in the 21st century.
Yeah. No.
I mean, how is this happening?
And so I think, you highlighted 2 points, and they're very much connected. I mean, one, home ownership rates for African Americans, right? Home ownership rates for African Americans and Latinos is around 44%, something like that. And then I was just listening to an interview that in 1930, African Americans had about a 40% home ownership rate. So, we oftentimes like to look at race relations in general as where things might not be where we want them to be, but they're headed in the right direction. But in a lot of key economic indicators, we're not even headed in the right economic direction. And that's true with home ownership. We've really been stuck. Home ownership rates for African Americans did go up during the bubble, right before the Great Recession, the crisis, but still it never even got to 50%. And then it's declined now to, below 45%, closer to 42, 43%. Now, there's that picture, which is also reflective of wealth. As you were highlighting, I mean, a lot of people don't realize this. Yes, black wealth went down dramatically, as did Latino wealth. White wealth went down too, but black wealth and Latino wealth went down at a much greater kind of percentage-wise after the Great Recession. But black wealth had declined since 2001. Blacks were on the decline from a recession in 2001 and then just went down even more dramatically during the Great Recession, 2007, 2008, 2009. We haven't seen a bounce back until about 2016, where, depending on how you measure it, but median black wealth in 2013 was about $1,700. In 2016, again, it depends how you measure it, is about $3,600. So when you say that there's cost of $17,000, I want to put in that context, where if the median household wealth is $3,600, that's 5 times, the median wealth of African-American household, that extra cost in home ownership.
I mean, one of the things I saw, there was a stat I was reading in the report as we were kind of getting ready for this, and it said that white wealth stood like $141,000, almost $142,000 in 2013. Right? 13 times greater than the median black household income of only $11,000.
That's right.
10 times greater than Latino income, which I think was around almost
right
$14,000. I mean, these are disparities, again, as we know, have been driven by all kinds of discrimination, both public and private. So, I mean, to me, the question is, what do you do about it? I mean, how do you intervene? I mean, you had to take Wells Fargo to court. They had to pay X amount of dollars, to people. So, but
and that taking them to court was for exploiting black borrowers, but it was not taken to court to try to equalize black and white wealth. I mean, that's a much bigger project, right? And so, just highlighting that even that, and even trying to get that $135 million, we'd have to see. I'd really be interested in what type of studies about how much of that ended up going to black families and what...
You're talking about the lawsuits of Wells Fargo?
The lawsuits, yeah. and what impact that actually had on households' wealth and development. Because, again, if your house is foreclosed, and you get $20,000, that's not going into wealth. That's probably just getting into trying to get your life back together. Because wealth is what you have beyond your income. It's what you have to hopefully invest in the future to help stabilize your life. And so oftentimes we're in such massive asset poverty that even if we get a little bit of extra funds, it can't go into wealth development.
I mean, there's a couple of questions here. The first question is, I'm curious what you think about the question of policies.
Yes.
And what policies have to occur, A, to not allow institutions like Wells Fargo or any other bank to charge exorbitant rates to black people borrowing money for buying a home. It seems like for whatever reason they cannot put their hands around anything that governs banks to stop them from doing it. Everything seems to be backstepping or doing things after the fact.
Well, and I think we thought there was some progress happening after the Great Recession. And we thought with the creation of CFPB,
which is
Consumer Financial Protection Bureau, that was kind of set up recognizing that we the whole deregulation of banks that had been so prominent since at least the 80s wasn't acceptable and helped bring the economy to a crisis, and that we actually needed a government agency to help protect consumers as they're dealing with finance.
Right.
But we've seen that that barely got off the ground before Trump got elected and has started turning back the few things that was happening with CFPB, Consumer Financial Protection Bureau. So I'm saying that to say that we thought there were some steps moving forward in dealing with banking regulation, but even that's being unwound. And I think even what was happening under Obama still wasn't taking the really serious racial, economic, and equality lens we'd have to look at if we want to deal with these issues.
So, I mean, if you look at the history, and we look at the history, and it's everything from the mob violence that happens anytime somebody in Chicago, other places, even in Baltimore.
Yeah.
I mean, it happened in Baltimore just 10 years ago in the community called Hamden, which is mostly white, and a black family moved in, and there were people burned them out, literally, right?
Yeah.
And it happens like this across the country. So, if you look at that, and also when a black family moves into a white community, white families flee. People use that to buy houses for cheap and then and charge exorbitant rates to black people coming in. And what was a white neighborhood that was an interracial neighborhood for 10 seconds becomes a black neighborhood and also then pushed into poverty. So that's the history of it. The question is two things. I mean, A, if Diedrich Asante-Muhammad was sitting here and the government said, okay, we're going to put you in charge of the commission now, and you're going to design a policy that prevents this from happening, what would it be?
Okay, so let me first take more at a local level, and then we can talk about national policy if you want to. I mean, I think one thing is we have to ensure, and I grew up in Columbia, Maryland, which is not too far outside of Baltimore, and it was meant to be a multiracial, meaning black and white at that time. And mixed income, right? And they understood those things were together. And so they made sure that there was affordable housing and that all neighborhoods had single-family housing, townhomes, and apartments. And then all these people would go to the same school. And they were fairly successful, I think, in having a multiracial, multi-income community for, let's say, a generation or so. And then we started seeing kind of communities emerging that didn't have those type of stipulations. So I guess the main thing is I think you have to ensure affordable housing, multi-income level housing, if you really ever want a racially integrated place that then also has good public services, good public schools. Because I just saw an article yesterday that was highlighting that now Howard County, in terms of income, has the most segregated schools in the state of Maryland, which is crazy. Howard County is the county that's over Columbia, but Columbia is the biggest aspect of Howard County. So it's fascinating to me.
It sits between Baltimore and Washington, D.C.
Yeah, and it's just fascinating to me that a place that was known for being developed to be multi-income and for being cross-class, cross-race, has now, because we haven't had that same type of monitoring and of maintaining affordable housing with new developments, because people started moving to Columbia at first because they wanted to be in a multiracial, multi-income place. Then they just want to move there because they want to be in a good school system. And so they just wanted the single-family home. They didn't care. They didn't want to be with lower-income people. And you saw more and more developments like that. And I think it shows, again, if you don't regulate it and make sure, because it's not just individuals, it's also the market. Because those who are building homes, you make more margins on big single-family homes versus the townhomes or what have you. So you have to kind of mandate policy in order to fix the policies of the past, because the free market will just kind of continue us into a segregated by income and by race ongoing
Right.
situation that we have been in.
I mean, it's almost like, what you're saying here basically is if you don't regulate and control capitalist instincts and capitalism itself, then it ends up destroying things around it, especially when it comes to issues of race and equality. And when you throw that into the mix.
Yeah, and
right?
two, if people don't even understand how whites became majority homeowners, right? Because it wasn't just the market. It wasn't just all of a sudden white people started working hard and said, I want to buy a home. We had to create a finance system that allowed to be able to buy a home without having to spend $100,000 outright, but you can put down, instead of 50%, you could put down 10% or 5%, and then you had the New Deal, which then also created great new subsidies for people to become homeowners. So that's the first time that whites became majority homeowners. But the problem is we haven't had a kind of massive New Deal program that was inclusive of people of color, and so we've never seen a true black middle class in terms of wealth and home ownership that whites have had. So people think the black middle class has been created because we started having more middle income, higher income employment and jobs, but we never had middle wealth, high wealth, or the home ownership of the white middle class. And so this, I always say racial economic inequality is the foundation of racial inequality. And until we deal with these economics, we're going to continue this kind of racial division. And
there has to be some kind of policing over these kind of high-risk loans that are given to black people. I mean, that's part of the problem here.
Yes. I mean, and there has to, and I would say there has to be policing and support for, subsidies for homes, for home ownership, for lower wealth people, and for median income people. Because again, the market itself won't provide this. I mean, actually, even those of us of higher income, we oftentimes are getting subsidized through different types of tax policies, what have you, to become homeowners. We have to have these incentives focus much more on working class people with lower wealth.
So as we conclude, Diedrich, I'm curious, what does your work take you then in your new position?
Well, yeah, so it is interesting, and I'm learning more and more about this space. I'm now at, as you said, NCRC, and actually a lot of the work that my equity inclusion team does is fair housing testing, fair lending testing for small business to try to see, what are the disparities in individual treatment for blacks, whites, Latinos, women versus men, what have you, getting that data, and then trying to figure out how to work with financial institutions about what are best practices that could be used to make sure, even if the bank up top doesn't want to reinforce the inequality we have today, what practices do they need to follow to do that? And then as well, work with regulators and even do lawsuits to try to ensure that they're not breaking current law as it relates to lending. And because, again, if you just look at who is getting the capital and where banks are, that in itself is part of discrimination. I guess that's one thing. It's not one piece.
Right.
It's like every layer of the system is stacked against you. And so the question is, how do you create a comprehensive policy that helps changing this kind of whole structure that is just continuing us into this massive racial wealth inequality, home ownership inequality?
The struggle continues and we're not done yet.
Yes, sir. Yes, sir.
Diedrich Asante-Muhammad, thanks so much for joining us here at The Real News.
Thanks for having me.
And I'm Mark Steiner here for The Real News Network. Thank you all for joining us. Take care.